You would have heard of the phrase cash is king when it comes to savings and investing, but in actual fact, cash is not king, and today I'm going to show you exactly why that's the case. How's it going, guys? Ryan here and welcome back to another video, and today we're talking about the concept of cash is king and actually proving why this isn't the case. And whilst you can have a lot of cash on you, there are so much better things that you can do with your money. But before we get into that, guys, please remember to like this video. It helps me out so much, and subscribe for more investing, stock market and wealth management content. And I'd love to know your thoughts on what is the best way to use your cash for investing purposes down in the comments section below. And with that, guys, without any further ado, let's kick off the video. The idea that cash is king comes from the belief that cash is more powerful than any other investment tool available. If you look at businesses, for instance, they need to ensure that they have cash on hand in order to pursue new objectives, pursue new directions, and all those sorts of things. But when it comes to an individual, is this actually the case? In my opinion, no, it is not. I do not believe cash is king. The philosophy that I take is money saved is money wasted. And that's due to the fact that your money is effectively not working for you. Instead, it is likely sitting there in a bank account earning a very low interest rate. And in my opinion, the only time that you should have cash sitting there in your bank account is for your safety net. You should have at least 4 to 6 months worth of savings sitting there in case anything bad happens. Let's say you lose your job, let's say your stocks absolutely plummet. If something bad happens, even a medical emergency, you need that quick cash injection. You've got money sitting there that you can fall back on. Other than that, you should make your money work for you. And today I'm going to show you a few examples of other ways in which you can best use your money compared to if it was just sitting there in a bank account. The first point that I want to touch on is the inflation rate in Australia. So as you can see, this graph shows the average inflation rate from 1985 through to 2021, and just slightly beyond that is estimated for the inflation rate within Australia. And for those of you who don't know, the inflation rate is effectively the increase or decrease in value of goods and services prices. So as we can see, every single year there has been an increase in the goods and services pricing. Now, the one thing I want you to keep in mind is a lot of these rates, in fact the majority of them, are significantly higher than 1.1%, and that is the number that I want you to keep in mind when you're looking at this. So as you can see, the increase in the cost of goods and services, whilst it is fluctuating quite a lot, on average is significantly higher than 1.1% every year. Now, if we go and have a look at the typical bank savings interest, so these are high saving interest accounts, what we can see is I've gone through and I've compared and I've filtered the highest savings accounts available right now. And what we can see is the highest available savings accounts interest rates are only 1.1%. And you can see there's only 2 currently sitting there. And as soon as you go below those 2, it's only 0.8% return, 0.75% return, and it keeps on dropping, guys. And the point I'm trying to make here is if you've got your money sitting in your bank account, the interest rate does not even account for inflation except on rare occasions. And as a result, what you're going to see is a decrease in the value of your money sitting in the bank account. So if you had 50 grand sitting in your bank account, the next year it's not actually worth the same amount and does not have the same buying power as other assets would. When I found out about this, it was a huge turning point in my understanding of money. I realized that having my money sitting in a bank account year on year is actually losing its value. You know, if you look back into the past at housing prices, for instance, there is a reason that housing prices were so cheap. And it was simply due to the fact that a dollar had a lot more buying power back then than it did currently. So effectively what's happened is inflation has caused the value of $1 to decrease, and as a result, to get that same property you would need more money right now than you would 10, 20, 30, 40 years ago, purely due to the inflation rate. So you're probably thinking now, what the hell do I do with my money, because it's sitting in the bank account and it is losing value? Well, have a look at the ASX 200 index, and this is 10 years of historical returns of the ASX 200. And yes, you can see in 2011 and 2018, for instance, there was a decrease in the returns. But on average, you can see over the course of 10 years, 8 of those were profitable, and a few of them, such as 2019, 2013, and 2012, were very profitable. And this is purely if you just invested in the ASX 200 index. On average, over the past 10 years, there has been an increase or an amount of returns of 6.61% per annum. And that is higher than the rate of inflation, which effectively means if you play the long game, you're going to be making 6.61% per annum in this period. And the beauty of what you just saw is the fact that you don't even have to find and invest in individual stocks. You can just invest in an index like the ASX 200 that follows the top 200 companies on the Australian Stock Exchange, and you're going to be making significantly more money than the rate of inflation. And in fact, your money's actually going to be growing because it's working for you. I just want to share with you another graph which is of one of the safest commodities in the world, and that is gold. And in particular, what we're looking at here is the gold price from 2006 until 2021. And you can see across a variety of currencies, the increase has been positive over the course of all these years on average. So as an Australian, look at AUD, look at the average at the bottom, year on year, per annum, 8.5% increase. That is what we are seeing for the gold price. If you invested in gold, that is what you are going to see. And yes, if for the international viewers out there, if you're from the US, if you're from Canada, if you're from somewhere in Europe where they're using the euro, you can see there's been a consistent increase. Even when we have horrible years on the gold market, it recovers over the long haul. And this comes down to the fact that you're investing in something long term and watching your assets slowly grow over time. And the reason that I shared the gold price with you guys is because it is typically used as a hedge, which effectively means it is used as a safety net. So investing in gold compared to other areas is a much safer option. And what you actually saw there as well is the average rate of return is actually even higher than investing in the ASX 200. Now, the final one I'm going to leave with you is real estate investing. And the beauty of real estate investing is that obviously if you buy a house, it is probably going to appreciate in value over the long term. And this is, as I mentioned before, what we've seen. If you tried to buy a house in 1970, it would be significantly cheaper than a house currently, but it's due to the relative rates of inflation, plus, the growth and the value of the area that the property exists in. But the beauty of real estate is that you can receive a passive income from it as well. So for instance, whether it's a residential or whether it's a commercial property, you can have a tenant within that property which is paying you rent. Effectively, that means you not only have an asset that's increasing in value naturally over time, it's also generating you money as well. So this is a great other alternative if you have enough money to get into the real estate market and start putting your money to work. And that effectively wraps up today's video, guys. I'd love to know your comments on why you think cash is or isn't king, because personally, as I've shown you, I don't believe it is. You can do so much better things with your money than leave it sitting in a bank account or in a safe somewhere. Otherwise, it's just going to depreciate in value. If you did enjoy today's video, please remember to leave a like. It helps me out so much, and subscribe for more investing, wealth management, and stock market content. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.